Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Growth and income stock time once again as we talk with Rob Plaza, our growth and income stock strategist at Zacks.com. Recently, you wrote about a growth and income stock called Cooper Industries, CBE, the ticker symbol, makers of electrical components.
Yeah, electrical components primarily to industrial companies and utilities.
Okay.
Going back to about the fourth quarter of 2008, they had a restructuring where they wanted to focus on the businesses that are doing well and cut out the poor performing businesses.
Mm-hmm.
That's led them to focus on emerging markets where they're getting a great deal of growth,
mm-hmm.
and also in countries where they're spending money and trying to stimulate the economy by investing in the infrastructure, utility grids, going green, maybe with the smart grid investments.
Right.
So they've been able to take advantage of that.
So their businesses, they're a global company.
Oh, absolutely, yeah.
All right.
Yeah. Their growth and income profile, the expected EPS growth of 22% this year, 16% next year, and 14% over the long term, 3 to 5 years. Dividend yield at 2.2%. So pretty solid growth and income characteristics right there.
Yeah.
They recently reported first quarter results on April 22nd. Revenue was down 2%, but that was about as expected. EPS, however, was up 53%, and they beat the Zacks consensus estimate by 3 cents. That allowed analysts, to start boosting up their estimates. Pretty much like every stock that we talk about, the estimates are going higher. Mm-hmm. And that was for about 3% higher for 2010 and 4% higher for 2011. And if we look at Cooper compared to the industry, superior on dividend yield, net profit margin, and return on equity compared to the industry average. One thing I like to point out, their dividend yield with the 2.2% dividend yield exceeds the industry average, which really doesn't pay one.
So I guess that's a good thing.
Well, yeah, they're on solid financial footing, and things are actually looking pretty good for Cooper.
All right. Then there is a company called Leggett Platt, LEG, the ticker symbol that you want to call to our attention. Producers of a range of engineered components, whatever that means.
Well, it's you hear the durable goods report that every month that they come out with. Well, it's the stuff that goes into end products, and they primarily feed into residential furniture and industrial fixtures. So maybe stuff like
this
right
table.
Here.
You never know.
That's right.
Desk.
And right now they're really on a tear. They went through so many problems. They were about a $5 billion in revenue going back to 2007. Right now their run rate's about $3 billion. So they cut out a lot of businesses that weren't doing anything, losing money, and they still made about $1.25 a year. And they're about that same spot now. They're going to return to that level on the much lower revenue rate. So,
but it goes to their health long term.
Oh, absolutely, absolutely. It's a much more stable business going forward, much more sustainable growth. Mm-hmm. And their earnings growth, 44% growth for this year, 25% for next year, and over the long term, 15%. And they pay a dividend right now that's 4.2%. So growth and income characteristics pretty good.
Sure.
And they also recently reported first quarter results. Their sales were up 14% off of a really bad first half of 2009. But here's the really good part. Operating expenses were flat. So that allowed them to grow their earnings per share by about 400%.
Yeah.
Easily beating the Zacks consensus by 8 cents. Estimates moving higher, 15 cents for 2010, 21 cents for 2011. And then compared to the industry, I mean, their balance sheets, it's really good for where they're at, about $250 million in cash. And they've got nothing coming due for the next 3 years. Their debt-to-equity ratio about 33%. And they beat the industry averages on return on equity, net profit margin, and dividend yield.
And do we have a dollar amount on the dividend?
Dollar amount?
Yeah, you said 4.2%, but do we know what that translates to dollars and cents wise?
I need a calculator.
Okay. All right, so that's right. I just thought maybe if you knew off the top of your head. But big divvies, that's what we like to see.
Yeah, and strong balance sheets, and the way the market's been going lately, the more stable the balance sheet, the more secure the dividend is.
All right, do you own either of these two?
No, I don't.
Check out more growth and income stock pick ideas and stock pick ideas in other areas of investing on our homepage at Zacks.com. With Rob Plaza, I'm Terry Ruffalo.